All right. Good evening, everyone. I am doing this after hours. I apologize. And user error. I thought I sent out the commentary cancel, and I didn't finish it all the way. So I apologize for those of you that showed up at 6 o'clock. Um, what's happening is it's my last boy in high school's senior year of soccer. So we're trying to help him out and support him through soccer, as well as my daughter made her sophomore soccer team and they're in need of a coach. So we're trying to double dip. Short answer is I was coaching my daughter's soccer team, rushing off to my boy's soccer game. I do apologize that I made a mistake with GoToWebinar on completing the process to send out the email that says I was canceling tonight's webinar. But here we go. Welcome to the Hurley Investments Market View Commentary for Monday, the 17th, done later after hours. I've got 3 bear market stops, but I want to start today with some examples in the big picture. And it's funny because they said, how bad can a recession be? We're nowhere close to a recession. But they gave some great examples of what happens. In an earnings recession, earnings estimates decline in a recession. The depth or their duration depends on how bad the earnings decline. And portfolio adjustments can migrate recession risks. One of the portfolio adjustments we do is we use those long puts. We use those long puts to make up some of that downward movement, be able to purchase more shares, so we get explosive growth to the upside. I found it interesting because it actually says, why do stock prices take a hit? And we came up with our 6 answers last week. I still have those answers up here at the top. Canada and Mexico need to come to terms with Trump, and it's kind of interesting because we found something out as I was going through my peeps at Goldman Sachs and other areas. One of the comments that was made to me was, hey, why are we picking on Canada so much? And it's interesting because Goldman Sachs was like, why haven't we picked on Canada for so long for their ridiculous tariffs on the US? Even through NAFTA, their tariffs didn't change, which, to be honest with you, I never understood. I didn't know that was happening. And one of the comments was made, well, if we want to hold Mexico accountable, where this serious drug trading is coming across, we have to be equally as vigilant against Canada. That makes a little more sense to me. Maybe we're kind of being brutal on Canada, one, because they've had tariffs since 95 when NAFTA was supposed to take care of that. They kept their tariffs on, shame on them. With that said, though, if we really expect Mexico to really focus on their border, we need that same expectation out of Canada. A Ukraine-Russia resolution. It sounds like Putin's coming to talk to Trump later on in the week. Tax breaks. Are they going to push through the tax breaks? Most likely. Better China relations. I'm not sure what's happening, but China had better retail sales numbers. I wonder if there isn't something going on back behind the scenes that maybe our China relations are going better. Baidu jumped 9% today. What an amazing run on Baidu, over $100. We are seeing better China relations in the number and the sales. I just wonder if Trump has talked to them. I wonder if they've already been through this with Trump once. So they're like, hey, we're going to get back to where we were on friendly terms with the United States. 20 to 35% market drop makes the market cheap. I'm going to put in here that we entered correction, not pullback, but correction. The minus 10% on the S&P 500, where the market looks cheaper and there seems like there's some deals out there. Also, the U.S. economy resets, which I think is where our entitlement problem runs. It'll be pretty neat to see how labor readjusts to these jobs that aren't being hired. People aren't getting the jobs that we can't get people hired for. What if it readjusts and we're in a better shape with, I guess in general, with the U.S. and those federal employees finding other jobs in other areas. Just some things that I thought sounded interesting that I think that would stop the bear market, and a couple of them are starting to work that way. But the big picture brought up some interesting points. Why do stock prices take a hit? Earnings contract and earnings estimates get cut. With tariffs, that's what we're afraid of. It's interesting because it didn't happen the first time. Didn't happen with the extended new ones that went up through Biden that Trump had put into place. And now all of a sudden we're worried about it through Trump's second term. I find it pretty, how would I say the word? I'm trying to say the word I'm thinking of. Pretty hypocritical. Hypochondriac, maybe. I don't know. But we've already seen investors refocus efforts on preserving capital. More people are getting their money out. More people are moving to bonds, which is not helpful. I think we've also seen emotional selling driven by the fear of suffering additional losses. Margin calls happen. Those just started to happen last week, which forced sales for over-leveraged investors unable to meet margin requirements. And investor confidence is shaken, which it definitely has happened now. If we take a look at the Dow, what a brutal 2 weeks, not even counting the 2 weeks prior. What an ugly February through March. Lost all of our gains, went sideways, bottom fell out. We looked like we were building a base, did not happen, bottom fell out, and down we went. We noticed we hit the 200-day and didn't finish above it. Our Dow Jones Industrial Average is still definitely bearish. All righty, let's erase my drawings there. Sorry about that. If we look at the S&P 500, what a drop. Bottom fell out in February. Down we go. We've had 2 days, couldn't get above the S2 standard deviation support level. Went up to it, came back down. Tuesday will be a pretty big day if we can continue the rally. The key is if we can get above the 200-day simple moving average. Because it's happened relatively quickly, there is a chance, which means we most likely will not get above the 50-day. This is where the resetting has happened for the sale of some positions that were missed in this downward fall. Still super bearish on the S&P 500. The NASDAQ, definitely bearish. NASDAQ had the same thing as the S&P. Bottom fell out, down it went. We have a ways to get back up to the 200. This could be that relief rally that we hit the 200, then we continue to the downside. I'm going to be 100% honest with you. We don't know. As we were taking a look at some of our positions today, Disney was one that we're looking to take off the 110s and either leave them off or try to see if it gets back up to the 101, in which case we would put more long puts at 101. Apple, We looked at rolling down the Apple, the 225s, down to the 215. Apple has a unique chart. We have the Worldwide Developers Conference coming up. We also have the NVIDIA conference coming up. Apple also had an issue with Siri. Looks much like the Nasdaq, but there was no Apple puts. Wherever they're at, they're supposed to be buying their stock. It didn't happen at the 200-day. It fell right through the 200-day like a knife through warm butter, right? Right on through. We had 225, so we're just positioning that down because we're not convinced that the rally's all taken care of. A couple of you noticed, well, we didn't have protection on Micron. Yeah, we took some Micron protection off, down around 92. Good guess, right? Need to erase those drawings, sorry. We took a good guess on taking some protection off of mine. It's had a pretty amazing. We are getting to the point when it does not get above the 200-day. We definitely looking at adding protection back on the Micron. That's something that we want to do. We just actually we did it today with 104s today. So we had no protection off. We took it off down around 90, I want to say it was 92, let it run up to 103, and now we're putting protection back on because it did not get above the 200-day today. NVIDIA. We're getting some movement on NVIDIA. Took our short puts off, kind of nice. We have $145 long puts in place, I believe. Let me take a quick look. Short calls, we have $145 short calls. We've had a nice bounce from 105 up to 119. Most likely will not get above here. They do have their conference coming up. It'll be interesting to see how their conference is coming up here. But it'll be interesting to see where we see our Magnificent Seven continue higher. Let me bring Google in. Someone said, boy, you took good profits on Google. Then you set some 165s in place and you haven't taken it off. No, we've got Google at 165. Seen the bounce higher. We would love to take 165s off, let 165s run up to 175, protection back on. We just don't have that positivity yet on where we think it's going to go. Yes, Bank of America. It's interesting because a couple people asked about Bank of America. We made some good money from 145 on down. We caught a bounce, put some 44s on. Bank of America is bouncing quite nicely, but it didn't get above the $42 mark. Yes, America, we should have on right now. So we're probably looking to roll those up to the 42, the 200 simple moving average for protection, seeing Bank of America hit and come back down and test the $49 mark. We may just add a second set right there to, I guess, for lack of a better term, to be in pretty good shape. Okay, you asked about XYZ. Looking at the chart. Come on, don't tell me I'm not good. XYZ block. We have protection on XYZ because we're not sure where it's going to. It's the top end of its range. We have protection in the middle at 56. If we were to see a continuation higher, we would definitely take off the 56s. But it hit that 60th range, couldn't hold it. Up day tomorrow, we'll take protection off. Down day, we're going to obviously keep it on and try to take it off closer to $54. And I said one more. So I did Bank of America. What was the other one you guys asked about? Oh, Baidu, of course. We've had protection off of Baidu at 87. We took that off. We've had a $13 run. We do have some short calls up at 100. Pretty amazing to see you make this run. Great call to take off those 87s right around here. So we've done about a $10 bump to the upside. We have 100s. We're going to roll out in time and up to about 120, which was a definite level of resistance. And that way we'll have protection already on and in place. We should be in really, really good shape with Baidu. So short answer is market uncertainty has led us to be more nimble in moving protection around. That's just how we've been right now. And we can't, for lack of a better term, we're trying to do the best we can to make sure that you guys are able to see what we're seeing. And what we're seeing right now is that, hey, we're going to do the best we can to make sure that we, well, I guess just to make sure that we're taking a profit and that we're not left out there to be unprotected in a big drop. We'd rather do a little extra protection than have not enough. But we've definitely been taking some good profits. We want to have some, and I'm going to actually put that in quotes, we want to have some protection in place instead of not enough. And so that's what we've been doing, and that's what we've been focusing on. All righty. The briefing, pretty good. I disagree with their thought that we're in a recession. There's nothing that pushes us towards a recession. There is some past history that if things spike, blah, 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 blah. They've got some charts back in the day. Look at this, look at that, look at this, look at that. The numbers don't add up. The numbers aren't there. I love briefing.com, but for lack of a better term, I think they've missed the boat. They just, there's nothing here in our numbers that justify it. We'll definitely be paying attention. I do like their brutal honesty, though. The recent sell-off in the stock market hasn't felt good. Valuations were stretched. Economic news is mostly disappointing. Tariff actions cranked up. The market was hitting all-time highs roughly 4 weeks ago. Same idea of tax cuts and deregulation, was suddenly hearing the voices about a possible recession. Garbage. It doesn't make sense. This is a definite bull market disruption. The fact of the matter, we've got some great pricing and some great opportunities ahead because none of what's happening has been in place and makes a whole lot of sense. This is an emotional market. And this is the emotional market where, for lack of a better term, the numbers don't add up. We should not have fallen this far. I would be warning most of you that, hey, we're probably going to get a pretty good bounce back. Then we, just like we saw, 4 weeks to come down, might be 6 or 8 weeks to bounce back. So be ready for the bounce back. All right, where are our markets end this week? I'm still going with lower. We've had one up day, but one up day doesn't make a trend. And because we've fallen so much, I found it pretty interesting because World S&P end in March. I'm actually taking this up to a 4. We just dropped 10%. All I'm saying is that in the next 2 weeks, I think we build a base somewhere in this area, which would be down about 4.5 to 5% for the month. I don't think we get a V shape and we make it all back, going back up to the highs. I just don't see it. I will believe that most people have taken money out of the market to pay their taxes. So I think we're in good shape not having a big tax sell-off last couple of weeks of March and into April. Earnings. Really not a whole lot's going on. Micron's kind of interesting. Nike, FedEx, Darden Restaurants. Economic reports. FOMC rate meeting on Wednesday. We had some retail sales numbers that were lackluster, to say the least. The retail sales that are supposed to come up today were 0.7. They came in at 0.2. We missed retail sales by 0.5%. Retail ex auto is supposed to be 0.4. We came in at 0.3. Pretty interesting though, because those numbers were not particularly good. But business inventories came in at 0.3 was the estimate. Came in at 0.3. The NAHB housing price index, I think that's housing market index, was supposed to be a 43, came in at a 439, and the Empire Manufacturing, that was awful. That was supposed to be a negative 1.0 and came in at a negative 20.0. So economic reports were not real good. Fact of the matter is the FOMC rate decision is on Wednesday. Nobody is expecting a rate cut. Boy, that would be amazing if they did, right? Dollar short, day late. They are probably waiting for well, they're waiting to see what's happening. They're going to wait to see where we've been. Obviously, we were protected. I'm going to erase most of this because we've taken a lot of it off or adjusted down to that 200-day. I think it's very interesting. I would not give the all clear signal. We are not to the point where it's all clear. We definitely need to let the market prove itself. I'm going to take a quick peek. I think they were positive, but let me check really quickly for futures. Pre-market, we're down a quarter on the S&P and 0.34 right now at 8:44 Mountain Standard Time. We look to have a down futures market tomorrow. Most likely the reason why Israel has attacked Gaza again. So the ceasefire in Gaza is over. The war is back on. I don't know if you guys heard, there's a pretty good earthquake in California over the weekend. So just some things to pay attention to. That world news will most likely will have most likely we're going to basically see a test of the bottom. That's one of the keys. A double bottom is rather unique to see that test, to see our market go down and test those lows and bounce higher. To give you a general idea, we're up about 3% maybe in the last 2 days, right? 2.5, 3-ish% maybe from the lows. Probably need to come back and test 5,500 on the S&P. Don't be surprised to see maybe a little bounce. Some bad news from the Fed. We'll come down and test 5,500. Then we'll see if we can make our way back higher. That's more in line with how typical chart patterns or market behavior is. So that's just something to pay attention to. Some pretty interesting articles here. China's Baidu launches two new AI models as the industry competition heats up. I kind of giggle because I've got an article I'm going to show you down below. Theory for AI has been lackluster, but I don't think I've seen any real AI that's been extremely helpful in general. But if anything, we're seeing that that Baidu cares about AI. China cares about AI. China's putting money into AI. This is something that can finally push Baidu higher. Just something for us to pay attention to and watch. Trump and Putin expect to speak this week as U.S. pushes for a Russia-Israel ceasefire. It's coming together. For all those people who are talking about how bad Trump was and how he's full of crap, we could still be 3 to 4 weeks away from Ukraine and Russia coming to a ceasefire. That would be great for both people. Both countries, excuse me, both people and both countries. It'll be interesting to see what happens. We'll see where we can go to see if they can get things taken care of. Guys, good news. We're going to get oil and gas prices back down to the 165 area. At least that's where it was in Trump's first term here in Utah. This is bad for profits for oil companies. We're opening it up. Who was it? Interior Secretary Doug Burgum and Energy Secretary Chris Wright made it clear this week that they want to make it easy as possible to drill on federal lands and waters. Drill, baby, drill. We are going to flood our market with oil. We're going to get oil cheap. We're going to fill up our reserves. This is not how the oil companies make money. So please don't think that this is good news for oil companies. This will probably depress the profits of oil companies, and we will not see big profits from this. So just something to keep in mind. This does not mean we are good to go. This means more than anything that expect oil prices to go down. In which case, if oil prices are going down, expect oil profits to also go down and follow. Just something to be paying attention to, that you need to understand how it typically works. Not saying that I'm always right, but again, how things typically work is that when the price of oil goes down, so does the profits from oil companies. If you haven't seen the Landman show, I believe it's a Paramount Plus Landman, there's a very interesting part that talks about the perfect price of oil is like $78. Google it on YouTube, Landman, the perfect price of oil. And it makes, in this show, it explains it very carefully how the range for oil, the perfect price for oil, if it goes below or above, they price the consumer out, and it's not where oil pricing needs to be. So drill baby drill means oil companies will make less margins and will most likely go down, like in the first term of Trump. After such a relentless market correction, the relief rally forces a high burden of proof. We are not taking everything off. We are being nimble. Again, we will most not likely, there's a double negative. We'll most likely not bounce above the 200-day. We're trying to put some more protection on right there for a bounce lower to retest the lows. A very interesting article on understanding market direction and market movement. And then here you go. Here's that leaked Apple meeting shows how dire the Siri situation really is. Again, let's face it. I use Siri to tell her, hey, call someone. What's the weather? I'm not using artificial intelligence to make decisions for me. In fact, the funniest thing that happened over the weekend is I was going to call someone and I didn't. So Siri was kind of butt dialing someone else. I told Siri, shut up. And she said, okay, and turned off. Artificial intelligence is not yet where we think it needs to be. Can it write a paper for you? Yes. Can it predict stock movements? Yes. Is it the end all be all that it can make your decisions for you? I hope not. It's not there yet. It probably will not be there for decades to come, nor maybe should it ever be to that point where it makes the decisions for you. It can give you information. It's great at collecting information, but you still need that human component to make your best educated decision. And it's just not there. Guys, I will get this posted for you tonight. I apologize. I just trying to enjoy my son's senior season of soccer, and it was my fault. I usually like to really blame GoToWebinar, but it was my fault for not finishing the it was my fault for not finishing what was supposed to be done to send out your notification for you. So I apologize tonight for those of you that showed up and I wasn't here. Guys, have a wonderful week. It's a great little bounce and start to the week. We did really good in making up almost all of last Friday's bounce. We also did pretty good today. And we'll continue to be nimble as we take the profits off those particular stock positions, but we are not saying the relief rally is on, all risk is off. That would be pretty foolish. So we're not looking at doing that at this time. We're still keeping some protections on. We'd rather lose a little on protection than lose a lot on your stock price. Guys, we're always watching the market so you don't have to. We appreciate you being with us, and we look forward to seeing you next Monday evening. Everyone have a good evening, and we'll talk to you then. Bye-bye.